Good morning, ladies and gentlemen. Welcome. I want to welcome all the participants and thank you for joining today's international webinar entitled Accounting and Finance Transformation in Digital Era in collaboration Bina Nusantara University and Tunku Abdul Rahman University College, which will be presented by Wong Pohli, Dr. Chow Yipang, Professor Toto Rusmanto, MCOM PhD CAPM CMA, Chitra Amanda SE Estate MSM PhD, and moderated by Puan Sri Dato Associate Professor Dr. Marilee Su Chang and Sinta Amalina Hazrati Hafiz SE MBA PhD Cert.A. Now, allow me to introduce myself. My name is Kania Rizky Noviarni and I will be your MC for today. Before I continue this even further, allow me to read the rules of the webinar so that today's webinar can run smoothly. 1. Participants are required to attend the webinar from the beginning until the end. 2. Participants are required to turn off the microphone. 3. Participants are required to open the camera during the webinar. 4. Participants are eligible to receive SAT points and e-certificate if participants join this webinar in full, and for Binusian, submit the summary before 6 p.m. this evening on Accounting Binus website. And for participants from TARUC and Binusian Maxi, please fill out the form via the link in the chat box. Now, I would like to thank and welcome warmly Mr. Gatot Supriyanto, SE, aka MBAS Accounting, PhD, Dean of Faculty of Economics and Communication. Mrs. Answatli Lindawati, SE, MCOM Honors, PhD, CSRS, CSRA, CMA, Head of Accounting Study Program. Professor Lindri Nasari as Professor of School of Accounting. Mrs. Yansun SE MBAS Head of Finance Program, Professor Toto Rusmanto MCOM PhD CAPM CMA Head of Accounting Technology Program, and lastly, Dr. R.A. Arianti W. Puspokusumo BSc MBM Head of Internationalization Partnership Program. And next, for our partner from Tunku Abdul Rahman University College, I would like to acknowledge the presence of Mr. Wei Chu Kok, Dean of Faculty of Accountancy, Finance and Business TARUC, and Dr. Chin Mo Yin, Deputy Dean Faculty of Accountancy, Finance and Business TARUC. Before we start the webinar, let us hear the opening speech by Mr. Gatot Supriyanto. To Mr. Gatot, the mic is yours.
Video, please. Video, please. Pak Ino, video, please.
To all the participants, please wait for a moment. We will see the video of Mr. Gatot Supriyanto for the opening speech. Okay, we will go to the next session. Next, I would like to invite the presence of Mr. Wei Chu Kok. The floor is yours.
Thank you, MC. Dr. Gatot Supriyanto, Dean, Faculty of Economics and Communication, Binus University. Dr. R.A. Arianti Puspokusumo, Head of Internationalizations and Partnership Program, Binus University. fellow colleagues and lecturers, students of Venus University and Thai UC, ladies and gentlemen, good morning to all of you. It gives me a great pleasure to welcome all of you to this Venus Thai UC International Webinar 2022 event this morning. Venus University and Thai UC has a very close relationship, and we have collaborated in many activities since I think 2 years ago. In 2021, this webinar is our first event, and there will be more collaborated event between these two universities lined up for you to participate. The theme for this webinar is Accounting and Finance Transformation in Digital Era. This is a contemporary topic. As we are now moving into a digital era, it is imperative for us to understand how the students who are pursuing accounting and finance to stay relevant in this era. What kind of the knowledge and skill set that the accounting and business students should acquire is worth for all of us to understand. Hence, this webinar, which cover the topics like changes in the role of accountants due to adoptions of technology, fintech in Malaysia, mastering accounting technology, and strengthening religion's values to become competent accounting in Industry 4.0, and decentralized finance in emerging digital economy are timely for us, all of us here participants, be it staff, lecturers, and students, so that we will gain valuable insight for these topics in today, this new era in the world globalization challenges. So last but not least, I would like to congratulate the members of the organizing committee for your hard works and dedication in successfully organizing this webinar event. I wish the event a successful one, and all the best to the presenter, the moderators, and student participants. Thank you.
Okay, thank you, Mr. Wee Chu Kok, for the opening speech. Next, let us hear the opening speech by Mr. Gatot Supriyanto. Let's us watch the video.
Dean of Faculty of Accountancy, Finance and Business, Tunku Abdul Rahman University College. Associate Professor, Dr. Chin Wei Yin as Deputy Dean. Speakers, moderators, students, and distinguished guests. Assalamualaikum warahmatullahi wabarakatuh. Good morning and selamat pagi. I would like to thank you for your favorable time to follow today's webinar. This event is part of ongoing collaboration between TARU and Venus University. Previously, we had a series of webinars and a very successful virtual international accounting competition that was joined by more than 30 universities from around the world. I hope there would be more to come, since we will have also an arrangement of faculty exchange at the end of the year. May the collaboration endure through time. I would also like to thank the committee for coordinating this wonderful event entitled Accounting and Finance Transformation in Digital Era. You know that this topic is very relevant and very important for the future of accounting as we embark with the new changes and challenges due to the advancement of technology. Finally, I am hoping you will enjoy the webinar and learn many things from the speakers. Thank you again to you all, and I will see you in the next activities.
Thank you, Mr. Gatot, for the opening remarks. Now we are entering the initial session of the webinar. In today's webinar, we will have two sessions. Our first session will be guided by the moderator, Mrs. Puan Sri Dato, Associate Professor Dr. Mary Lee Su Chang. She is an Associate Professor, Department of Professional Accountancy, Faculty of Accountancy, Finance and Business. Proceed on the second session. The moderator who will guide us today is Dr. Shinta Amalina Hazrati Hafiz, SE, MBA, PhD, Cert BA. She is a lecturer specialist, School of Accounting. Before starting the session, we will have a photo session first. Participants, please turn on your camera and get ready. For the photo session, Mr. Archie will help us. So Mr. Archie, would you help us now for taking photos?
Okay, Kania. So good morning, everyone. Allow me to take photo. There are 5 slides in here. So I will take each slide for each photo. Okay, please open your camera so I can take the photo immediately. To all participants, please open your camera. Okay, I'll start from the first slide. 3, 2, 1, and okay. For the second slide, 3, 2, 1. For the third slide, from 3, 2, 1, and fourth slide, 3, 2, 1. Okay, for the last slide, 3, 2, 1. Okay, I give back to Kania. Thank you, Kania.
Okay, thank you, Mr. Archie and everyone. Without further ado, let's start our first session with our first moderator, Associate Professor Marilee. Associate Professor Marilee, the floor is yours.
Thank you, Kania. Good morning and selamat pagi kepada tamu yang terhormat dari BINUS University and distinguished guests from Tunku Abdul Rahman University College. To all participants, a pleasant morning and a warm welcome to the webinar. Our topic for today is Accounting and Finance Transformation in the Digital Era. With the advancement of technology, the accounting business is continuously evolving, and today's accountant is no longer limited to task-oriented projects. Numerous repetitive duties previously handled by accountants have been automated, allowing accounting experts to focus on advisory roles. What are the changes and challenges that today and tomorrow accountants will encounter as a result of technology adoption? Our first speaker for this session is Ms. Wong Po Lee, and she will share her views on how technology has transformed the accounting industry. Allow me to introduce Ms. Wong Po Lee, a lecturer at the Faculty of Accountancy, Finance and Business, Tunku Abdul Rahman University College. Ms. Wong is a Chartered Certified Accountant of Malaysia, a member of the Malaysian Institute of Accountants, and a fellow of the Association of Chartered Certified Accountants, UK. Prior to joining Tunku Abdul Rahman University College, she was in the corporate field, working at a few Malaysian public listed companies. Ms. Wong has over 15 years of experience in commercial industry and is knowledgeable in both the Malaysian and international accounting standards for SMEs and public sector organizations. I would now like to invite Ms. Wong onto the virtual stage. Over to you, Ms. Wong Po Lee.
Okay, thank you, Ms. Kania, and thank you, Puan Sri Marilee. A pleasant morning to my fellow friends from BINUS, fellow colleagues from University College Tunku Abdul Rahman, and ladies and gentlemen. Please allow me to share my screen. Okay. Are you able to see my screen? Puan Sri Mary, are you able to see my screen?
You scroll some more because I just see, is it? I think so.
Okay. Miss Kania, you can see my screen?
Yes, I can see the screen.
Okay.
Well,
Yes,
okay.
yes.
Yep. Thank you, Miss Kania, and thank you, Puan Sri Marilee. Okay. The word technology, I believe, is a common word among us all, especially the younger generations, since you are born to embrace the technology. In the past few years, the revolution of technology has caused impact on various aspects of business operations, of which accounting are also affected by the fast pace of technology. In the past, bookkeeping services used to be the most tedious work ever, requiring the most manpower for completion, checking of errors, compilation of records before we transform it into a complete set of financial statements. However, with so many steps required for complete set of bookkeeping service, we are still prone to errors, waste of papers, and definitely a waste of time. With the new developments that has taken place, the steps to complete a bookkeeping service has now improved from creating our own double entries to implementing machine learning and artificial intelligence, where a system captures the double entries on their own and only requires the first round of checking. Thereafter, the machine will learn on its own and capture the same way should there be similar transactions in the future. Now, ladies and gentlemen, welcome to the world of technology. Most of us used to wonder if there is a possibility that we will be replaced by technology someday, and what should we do to future-proof ourselves? Well, the answer to this will be a yes and a no. Certain scope of work can be replaced by technology, if and only if it does not require too much of brainstorming to complete a task. Example, a sales invoice. What you need to do is to debit trade receivables and credit sales in the event that this is a credit sale. System is definitely good in capturing similar transactions. But what about transactions that are rare? Well, of course, humans have to communicate with the system so that they learn from us and be independent once again. So what is our role here? To assist the machine? No, to monitor and to improvise the system to assist us in ease of our burden so that we can then diversify our attention to a more important task. Ladies and gentlemen, today, the topic that we are discussing would be the change of role in accountant due to adoption in technology. Based on the examples provided just now, this is just the introduction part to raise your awareness on what to expect in your future career. With more and more advanced technologies introduced to us, from big data analysis to blockchain, then machine learning and artificial intelligence, we should be able to justify which technology fits the organization better. Of course, we can never say no to technology just to future-proof ourselves, because someday, like it or not, we have to embrace technology. So as an accountant in the future, we must be able to analyze the type of technology that can be used to assist the company. Example that I can quote. A lot of companies out there refuse to adopt cloud accounting software, even though the benefits outweigh the desktop accounting software. But at the same time, in terms of cost, desktop accounting software is much more cheaper. But if the organization has several companies or subsidiaries worldwide, perhaps cloud accounting software is more effective and efficient compared to companies operating locally. With cloud accounting software, it allows real-time data processing, whereby the information is accessible everywhere at any point of time as long as there is internet coverage. Another example would be implementing a system with the use of blockchain technology to reduce the time taken for a transaction to be approved. This is applicable for companies with multiple divisions, especially when most of the division heads are rarely to be seen in the office. Technology helps us to connect with these people and definitely saves a lot of time waiting for them to come back to office to verify hard copies before it can be passed on to the next level for approval. In addition, with big data analysis, it allows accountants more time to analyze records rather than spending time to key in transactions. What is big data? Basically, big data refers to a collection of data from many different sources and is often described by 5 characteristics: volume, value, variety, velocity, and veracity. With the 5 V's here, it enables an analyst to analyze and process variety of large data, which is valuable and trustworthy to a certain extent at a fast pace. So what is the role of accountant here? To understand how to use the data to enhance the value of an organization, which leads to a more effective operations, stronger customer relationships, and other clear and quantifiable business benefits. The last part that I wish to share would be enhancing the role of accountants in promoting sustainability reporting. A lot of times, organizations tend to complain that sustainability means extra expenses. a waste of money, minimizing profits of the organization. But sustainability is the only way to ensure that the company can maintain operation for a long period of time. Without sustainability, no matter how well the company is operating, they are unable to sustain for a long period of time. Why? Imagine if someday the whole world collapsed because everyone is busy making revenue from the from the resources that they have, but they have forgotten about the need to take care of the environment, the society, and the corporate governance. Will the company still be able to survive? You might have all the revenues that you wish for, loads of money is earned, but if the world collapses, everyone collapses. So what is the monetary value here? Hence, as an accountant, we should now focus in utilizing technology to assist in enhancing the sustainability reporting of a company. Example that I can relate is our electricity service provider, Tenaga Nasional Berhad, had recently introduced TNB Smart Meter. The technology that are applied here is Internet of Things, a system of interrelated computing devices. With Smart Meter, from the user's perspective, we are able to track the electricity usage every month, generates bill on our own without the need to have a physical copy, and also create an awareness on how to save electricity. From the accounting department's perspective, there is no need for us to key in the sales invoice one by one because the system is able to merge with the accounting software, hence enabling all the sales transactions to be recorded in the accounting software. It definitely saves up a lot of our time in ensuring that all sales invoices are taken up correctly. Our contribution here is to ensure that all sales invoices are correctly recorded, following up on credit control activities maybe, and with big data analysis, we are able to analyze further on the user's pattern based on area, perhaps, so that we can furnish this information to other departments for enhancement in terms of customer service. When we are able to make use of the big data that we have to create an awareness to the society so that they are aware that high electricity consumption basically is harmful to the environment, we are moving towards sustainability. Another example that I can quote, a bank can contribute in achieving sustainability through financing customers to transitions towards sustainability. How? It does not just involve transitioning the operations to a kind of a net zero carbon footprint, but also transitioning their supply chain and most importantly, financing the emissions since bank relies on others to decarbonize and transition. This is important and definitely the toughest part as a bank because the risk involved in those industries that the bank will have to assist is definitely the highest. So what is our role here as an accountant? We provide advisory, we plan financing, we make good investments, and of course, we assess the risk by revamping into the risk appetite so that they can fund high-risk businesses in order for everyone to move towards zero carbon emission. Conclusively, as a future accountant, we no longer work as a bookkeeper, but we will have to take up higher roles in order to assist the organization in making better decisions and moving towards sustainability. How? First, we have to understand the company's operation as a whole. Next, to use the correct technology to assist us in daily operating activities. Again, will technology replace us in the future? Yes, for certain roles only, but fret not, no matter how intelligent the system is, human is still needed to improvise and maintain the system. Thank you.
Thank you, Ms. Wong, for your interesting and educational presentation. With technology transforming accounting, it appears as though we, the accounting professionals, will need to transform our skill sets and mindsets and be open to accepting and learning new technologies. Ladies and gentlemen, if you have any questions for Ms. Wong, please email to her email address at poly@krc.edu.my. Her email address will actually be posted in the chat box, as she has some unfortunate circumstances in which she will not be able to handle the questions at the moment. Despite this, Ms. Wong went out of her way to share her presentation with us, which we greatly appreciate. Many thanks, Ms. Wong.
Thank you, Pan Sri Mary.
Thank you. Without further ado, allow me to introduce the next speaker, Dr. Chow Yi Peng. who will share her knowledge in fintech or financial technology in Malaysia. Dr. Chow Yi Peng is a senior lecturer at the Faculty of Accountancy, Finance and Business, Tunku Abdul Rahman University College. She obtained her Doctor of Philosophy in Finance from University Putra, Malaysia. She has almost 20 years of teaching experience in various finance-related courses at the undergraduate and postgraduate levels. She's actively involved in research work, having published in several referred journals and conference proceedings, both internationally and locally. Prior to joining the academia, she was attached to the banking industry for both the local and foreign commercial banks. Dr. Chow, it gives me great pleasure to invite you onto the virtual stage. Thank you. Dr. Chow.
Thank you, Puan Sri, for your introduction. I shall share my screen now. Can you see my screen?
Yeah.
Can, okay. A very good morning to everyone. I'm Dr. Chow Yi Peng from Tunku Abdul Rahman University College, Malaysia. Today, I'm here to share a talk with you on fintech in Malaysia. Financial technology or fintech is the adoption of technology to improve and support the delivery of services in the finance sector. And fintech is fast becoming an important part of the financial services industry, as well as for the future economy. Here is an overview of the fintech landscape in Malaysia. From this diagram, we can observe that although fintech encompasses multiple finance horizontals, digital payments, fintech space. Other important growth areas in the fintech industry include lending, insurtech, wealth tech, remittance, blockchain or cryptocurrency, and many more. Now we shall explore the opportunities in store for the development of fintech in Malaysia. First is the rising connectivity and proliferation of smart devices. Given the rising connectivity, for example, through the expansion of advanced mobile broadband networks and proliferation of smart devices in Malaysia, fintech is expected to grow rapidly in the country. And this table illustrates the stages of fintech development in selected countries in Southeast Asia. In terms of financial penetration and access to credit, although Malaysia is behind Singapore, it is still doing quite well compared to other countries in this region. Meanwhile, in terms of 3G or 4G penetration, Malaysia still has some catching up to do compared to some of its neighboring countries, in particular Singapore and Thailand, even though it fared relatively well compared to other countries in the region. Having said that, overall, there are abundant opportunities for fintech development in the Southeast Asia region. For example, this region has the fourth largest internet market in the world with 360 million users. Moreover, the combined e-commerce revenues surpassed $25 billion by 2020. And Southeast Asia data center is expected to reach $3.5 billion in 2024, with an annual growth rate of 12.9%. The second factor that promotes the development of fintech in Malaysia is regulatory support. Here, I shall highlight the four major regulators or regulatory support related to fintech development in Malaysia. First is the Central Bank of Malaysia, also known as Bank Negara Malaysia. Bank Negara, being the regulator of payment services of Malaysia, has been very supportive of the growth of fintech services. In its financial sector blueprint 2011 to 2020, Bank Negara has clearly set its target of migrating cash transactions towards electronic payment systems. And Bank Negara's vision of creating a cashless society is also reflected in the latest blueprint, which cover the years 2022 until 2026, where the central bank aims for the advancement of digitalization of the financial sector in the country. Besides that, Bank Negara has also launched the Financial Technology Enabler Group, or FTEC, in 2016, which was recently renamed as the Financial Technology and Innovation Group. FTEC was launched to formulate and enhance regulatory policies in order to facilitate the adoption of technological innovations in the Malaysian financial services industry. And FTEC maintains a regulatory sandbox which allows both financial institutions and fintech companies to experiment their fintech solutions in a production or live environment. Second is the Malaysian Digital Economy Corporation, or MDEC for short. MDEC has also played an instrumental role in pushing fintech adoption in Malaysia. While Bank Negara focuses more on regulation, MDEC provides investment opportunities, knowledge and awareness of the fintech ecosystem, and it has also set up an innovation lab for continuous fintech development. Precisely, MDEC has partnered with various stakeholders and enables fintech startups to interact with industry leaders to enable them to develop their fintech solutions more easily, as well to encourage early market entry into the fintech space. Furthermore, to boost fintech literacy and also to serve the growing demand for fintech talent, MDEC has also collaborated with institutes of higher learning to deliver modules and programs on fintech. In addition, in partnership with the United Nations Capital Development Fund, or UNCDF, and Bank Negara, MDEC has also established the Financial Innovation Lab in order to accelerate innovative solutions in digital financial services. And more recently, in 2020, MDEC has once again collaborated with Bank Negara to establish a capacity building program called FinTech Booster. And this program provides fintech companies with, firstly, capacity building tools and supports on legal and compliance matters. Secondly, business development. And thirdly, access to technology resources. That is the Securities Commission Malaysia. The Securities Commission, being the regulator of the capital markets in Malaysia, has introduced various regulatory frameworks, such as for equity crowdfunding, peer-to-peer financing, and digital investment manager, or robo-advisory. Lastly, the Malaysian government has also introduced the Malaysia Digital Economy Blueprint, or MyDigital, last year, where the blueprint serves as an action plan towards Malaysia's digitalization efforts, which will be implemented up to 2030. And among the trusts and strategies in this blueprint, which support the development of fintech in the country, includes, first, the plan to facilitate digital adoption, access and effective use of digital technology among businesses. Second, the building of digital infrastructure. And third, the effort to strengthen safety and cybersecurity in digital activities and transactions. That is the opportunities presented by the COVID-19 pandemic, where the growth of digital adoption is further accelerated by the COVID-19 pandemic, which has encouraged greater reliance on fintech solutions. During the pandemic, the financial services industry has been rapidly transformed. In fact, according to some industry observers, the progress of digital adoption, which typically is expected to take place over a 5-year time period, took place in a matter of just 10 months due to the onset of the pandemic in 2020. In this diagram, Bank Negara reports that on average, a person in Malaysia made 170 e-payment transactions in 2020, which is an increase from 150 transactions in 2019. And this is mainly due to the increasing shift by the consumers towards contactless and online payment methods, where these payment methods are deemed to be safer and more convenient because they help to minimize contact and reduce the need to visit the physical premises. Besides, online banking transactions registered a 49% increase to 2.5 billion transactions in 2020. Meanwhile, e-wallet transactions increased by 131% to 0.6 billion transactions in 2020. On top of that, more merchants also signed up to accept e-payments, with the number of QR code payment registrations increasing by 164% during these periods. And moving forward, as we shift into the post-pandemic new normal, it is expected that even more digital financial services, mostly provided by fintech, shall be offered to meet the growing consumer demands. Fourth is the opportunity to engage in digital banking business. Here is a timeline depicting the sequence of events related to the development of digital banks in Malaysia. On 31st December 2020, Bank Negara Malaysia issued the licensing framework for digital banks and stated that it might issue up to 5 digital banking licenses. And the licensing framework aims to improve financial inclusion, where it allows the digital banks to address the needs of the underbanked and unserved market segments in the economy. And following a 6-month application period, which ended on 30th June 2021, Bank Negara received a total of 29 applications for digital bank licenses. And the applications came from diverse parties, ranging from banks, technology companies, e-commerce operators, fintech companies, and many more. And it is expected that Bank Negara will announce the successful applications in the first quarter of 2022, which is in fact tomorrow itself, or maybe in a few days' time. So we are waiting with great anticipation as to who shall be these successful applicants. Although many opportunities are in store in the fintech ecosystem, fintech players also have to overcome certain challenges. And here I shall highlight 2 critical challenges affecting the fintech development in Malaysia. The first challenge is related to security and privacy issues. In terms of security risks, the 2 major sources of security risks arise from ransomware attacks and third-party service provider associated risks. Firstly, Some financial services providers have reported that they encountered sporadic ransomware attacks that have caused some disruptions in their business operations. Moreover, the risks associated with the use of third-party service providers have also increased substantially for some of these financial services providers that relied more heavily on third-party services, especially during the pandemic. And these risks include the IT infrastructure of these third-party service providers that are not sufficiently protected against IT failures and cyber threats. Meanwhile, in terms of privacy risks, many financial services providers have opted for remote and flexible working arrangements during the pandemic, and the use of unsecured platforms and devices to perform their day-to-day tasks have increased IT security risks and the risk of weaker protection of confidential data. Therefore, issues related to security and privacy of fintech services have to be addressed accordingly in order to alleviate fears and concerns among the consumers. The second challenge is related to the crowded and fragmented fintech market. Presently, there are over 200 fintech companies in Malaysia, and the fintech market is becoming increasingly crowded and fragmented as more fintech players are entering the market. And the fragmented market has resulted in these fintech players fighting for their market share and survival. Moreover, there is still a lack of unified national level interbank payment system into which these fintech companies can connect their platforms. Even though Bank Negara has attempted to address this issue by introducing new digital platforms to facilitate fund transfers. For example, the introduction of Duit Now. So, given the large number of fintech players competing in a fragmented fintech market, it appears inevitable that the market may undergo consolidation in the near future. And the question remains as to how many fintech companies can survive and remain sustainable in the long run. So, after considering the opportunities and challenges in the fintech market in Malaysia, the question here is fintech an enabler or a disruptor, especially to the traditional banks and other financial institutions? Well, according to a joint survey report on fintech development in Malaysia by PwC Malaysia and Asian Institute of Chartered Bankers, 82% of Malaysian financial institutions see fintech as a threat to their business. And 22% of them believe that they may lose more than 20% of their revenues to the fintech companies. Whereas 47 of the Malaysian financial institutions state that they have placed fintech at the heart of their strategic decision-making. And in the recent years, it can be observed that Malaysian banks have been strategizing their play or strengthening their strategies to respond to fintech disruption. Firstly, banks are increasingly offering digital financial services. In addition, they are also seeking to partner with promising fintech companies and also to develop their own sandbox as a platform for the community to develop and collaborate on fintech ideas together with the banks. And these banks have also been aggressively recruiting their fintech teams. So in conclusion, traditional players are given the opportunities to differentiate themselves through fintech. So they can either embrace fintech or risk losing their competitive edge in today's disruptive financial environment. That's all from me. Thank you.
Thank you, Dr. Chow, for your insightful presentation, which has given us a better understanding of fintech in Malaysia. Fintech is rapidly establishing itself as a critical component of Malaysia's financial services sector. The pandemic has also caused a surge in digital adoption driven by online and contactless transactions. And with digital payments and e-wallet transactions, as we can see from the pie chart from Dr. Chow, leading the way in Malaysia's fintech space. Now, ladies and gentlemen, we are now entering the question and answer session. If you have any questions, sir, can you please enter your questions in the chat box? If you have any questions for Dr. Chow, please, enter your questions in the chat box. Because at the moment, I can only see 3 questions. 2 questions is actually basically from me, and another question from Chia Ziyu. So maybe Dr. Chow, maybe we will address the questions presented by Chia Ziyu, where I think she asked, what is your standpoint on the implementation of technology towards SMEs whilst heading towards sustainability? Dr. Chow? Hello?
Oh, sorry. I was muted just now. Right. Sorry, Puan Sri, could you repeat the question?
What is your standpoint on the implementation of technology towards SMEs whilst heading towards sustainability?
All right. So first, in terms of introduction of the adoption of technology to SMEs, I think one important factor that is driving the adoption of technological innovation among the SMEs is like what I've mentioned, regulatory support. Okay, because on top, our Malaysian government has been very supportive, right? Not only towards the large companies, but also we want to make sure SMEs are also actively engaged, right, to embrace technological innovations in their day-to-day operations and also in their product offerings and services. Okay, and SMEs are also included in some of the major regulatory support that are outlined by the government. For example, like just now what I said, for example, related to the Malaysian digital economy blueprint. Okay, and in order to support these SMEs, for example, according to the blueprint, the government has indicated that they will provide support, for example, in terms of creating digital infrastructure, right? That can support the operations of the SMEs, and also by providing relevant funding, right? Technical expertise and so on. Because we understand SMEs normally, they may not have the expertise, right? And the financial support to transit or to move into a more technologically enabled environment. Okay, and related to sustainability issues, of course, when we talk about embracing technology, at the same time, we hope that we will also achieve the goal of sustainability. Because, for example, with technology, for example, we also want to move towards like carbon-free, right, environment, where we move away, like for example, from paperless transaction and more towards digital or electronic-based transaction. Okay, so that in a way will also help to achieve the sustainability goals of the SMEs. Okay, I hope I managed to answer the question posed by Puan Sri.
Chia Ziyu, are you happy with Dr. Chow's answers?
Right. Okay.
Okay, actually, Dr. Chow, I have actually 2 questions.
Okay.
We're talking about digital banking. Now,
Yes.
At the moment, I thought that we have actually the digital banking in process. So basically, what's the difference between online banking and digital banking?
Yeah, there is always a confusion because when I talk to I think even people and my students and so forth, sometimes I notice there is a confusion because in terms of online banking, it was already around for some time. Okay, but what is the difference with digital banks? Now they are different. Because online banking is a service provided by traditional banks that I've mentioned, right? Our normal traditional banks, that our commercial banks, because when they embrace technological innovation, they have embarked on, for example, online banking, like internet banking, mobile banking, and so forth, okay? But digital banks are different. Digital banks, we have not implemented yet. So as just now I've shown in my timeline, we are still waiting for Bank Negara's announcement, okay, which should be rightfully, if according to what was initially indicated, should be tomorrow, because according to the timeline, the first quarter of 2022 should be tomorrow, or maybe in a few days' time, hopefully, where Bank Negara will issue, right, the first set of digital bank licenses, okay? And this is something very new, not only to Malaysia, but I would say to Southeast Asia as well, because not many countries have actually, not many central banks have actually issued digital bank licenses yet, right? With the exception, perhaps of certain countries like Singapore and so on, okay? So what is the difference with digital banks? Digital banks, in terms of who can get the license, all right, to operate a digital bank, it is not confined to traditional banks, but it can come from non-banks, okay? Non-banks that I've mentioned just now. The applicants for digital banks came from diverse parties, which can include like e-commerce operators, technology companies, and so on. So meaning we are allowing the non-bank companies to enter into the provision of banking services, but these are digital banks. And in terms of outreach, we would expect that the aim of the central bank when we want to offer digital bank services is we want to reach out for those segments of the economy which are normally, they are more difficult to reach and more difficult to serve. For example, could be among the poorer society, okay? Because normally we expect digital banks because they are offered online. So we may see in terms of lower transaction costs and because, it can be reached out easily compared to like traditional banks. So they are different, online banks and also the digital banks. Did I answer your question, Puan Sri?
Yeah, Dr. Chow, I can understand. You say is to reach out the poorer society. Now the poorer society, sorry to say that sometimes they may not be IT savvy.
True, so that's true. Yeah.
And secondly, you think that can they actually afford to have smartphones?
That's true.
So I think that is basically one of the challenge of this digital banking.
Yes.
Right.
Yes, that is true. That's why on one hand, we want to reach out to them in terms of affordability, and they're not confined to physical premises. But then again, the digital divide still exists, and that has to be addressed so that we can reach out to the underserved segment of the society.
Yeah, thank you, Dr. Chow. The second question I'm actually curious is whether the incumbent banking or the traditional banking, can they actually survive in the new digital banking landscape? Can they?
So as I've mentioned in my concluding remark, right, because in today's, what would I say, our business environment keeps on evolving and changing, right? So not only confined to banks, but even in other, corporate sector. So if a company doesn't want to embrace change, eventually they may be put out of business. Okay, so that includes for traditional banks. For now, our traditional banks, we say it is still strong, right? Relatively strong. They are large and then they are financially sound. But, nobody can interpret or, anticipate what may happen once we allow, for example, the digital banks or the fintech companies to come in to also take a share, right, of the overall market share of the banking and the financial services industry. Now we can experience, the revenue. If they don't embrace digital financial services, some of their revenue may be affected, right? And with more and more of these, incoming like digital banks. So to me, if traditional banks want to remain relevant, competitive, they have to embrace changes, okay? Otherwise, nobody, right, can, we can say can fully protect them, right? Unless they are willing to make the change, and therefore they can capture the contemporary needs of the consumers. Okay, Puan Sri, did I answer your question?
Thank you for the, for your response. Later on in my conclusion, I will actually like to share my reservations, okay, on this increasing digitalization.
Okay.
So any more questions from the floor? Well, if there is none, then I shall proceed on to wrap up the session, okay? So anyway, Dr. Chow, thanks for your riveting and informative responses to all the 3 questions. So to wrap up the session, it can be concluded that rapid technological innovation appears to have revolutionized the accounting and financial industries. And we have seen many articles, numerous articles, which extol the virtues of these new technologies, full of praises, right, for these new technologies. However, on the other hand, I would also like to share my concerns about the increasing digitalization of the accounting and finance industries. Like what Dr. Chow has actually expressed just now is my concern is basically on the cyber security. Okay, do we have actually a pool of cyber security experts capable of executing robust cyber security? Now, as it is, I think I'm sure that most of us we have heard about this, this news on the MySejahtera. Okay, and now that there is some problem regarding the who actually owns the data, okay, in the Sejahtera, MySejahtera. So that is a problem with digitalization and information being fed into the system, into this MySejahtera, without us knowing actually who owns the data and who owns the apps. Now there is this problem issue going on in Malaysia. Now, secondly, you look at the cyber criminals. You see the cyber landscape is becoming so increasingly sophisticated. So that is the concern, with all this digitalization, all right? So do we actually have, all right, this kind of security features, okay? Secondly, my concern is, all right, relating to senior citizens like me. You see, I'm still not digital savvy, So most of these senior citizens, they are not digital natives, nor are we savvy smartphone users, okay? But all these senior citizens, they are the wealthy clients of the bank, correct? So are they actually able to with this onset of digital banking? As with me, you see, I don't actually use online transactions, basically because I'm very worried about the security features. You see, and sometimes when you press the wrong button in your phone, you'll find that your transactions, all your payment also gone. Your payment, your funds in the bank. That's my concern. Until today, I don't use online banking. Okay. Now, thirdly, is the requirement of smartphone, to access to the various apps. Now, and as we know, keep on constantly updated, all right? Either to enhance banking features or for security reasons. So therefore, the users have to also update the smartphone to access to the most up-to-date app. Now, as you know, that most of these users, especially the senior citizens, again, we want a phone that can only make and receive calls. And now with these smartphones, to update all these new apps, so number one, can these users afford or not? Right? We are not like those youngsters are crazy over updating, their smartphones to all, chasing after all the latest Apple phone, right? So the thing is, dating, the smartphone, even my Sejahtera, you look at the senior citizens. Actually, when they update, the my Sejahtera with new features, you see the senior citizens will have a problem, and they didn't even know to make appointments through my Sejahtera. So now we're talking about digitalization and all that. So I think that is actually something worrying and very challenging. Okay. Now, my apology for taking up too much of the time. We have reached the end of this session. Thank you all for your presence and support. Terima kasih. Bu Kania, allow me to return the virtual floor for the next session. Thank you. Thank you.
Okay, thank you, Associate Professor Mary Lee, for leading the webinar so well, and thank you, Ms. Wong Poh Lee and Dr. Cho Yipang for the insightful presentation. Now let's move on to the next session, which will be guided by the moderator, Dr. Shinta Amalina. Dr. Shinta, the floor is yours.
Thank you, Kania, for allowing me to moderate the second sessions. And it will be held by Prof. Toto and Dr. Citra Amanda. So before we move forward on the sessions, I would like to welcome Prof. Toto as the first speaker to this floor. Prof. Toto, how are you today?
Good, thank you,
Okay.
Dr. Sinta.
It's great to see you today, Prof. Toto, and it will be our honored time to listen to your knowledge today. And I would like to introduce you first to the participants about Professor Toto. So, Professor Toto Rusmanto, MCom PhD, CAPM CMA, earned his master's and PhD from University of Wollongong, Australia. He is the first professor in accounting of BNUS University. Prof. Toto joined BNUS University since 2012 as the Deputy Head of Applied Finance of BNUS Business Schools, and currently serve as the head of Accounting Technology Program at BNUS Bekasi. His research interests are around corporate governance, banking, and financial market. He has presented and published his research in international conferences and journals. Some of it are published in Research in International Business and Finance, International Journal of Innovative Technology and Exploring Engineering, and Journal of Business Studies Quarterly. So Professor Toto today is going to discuss about mastering accounting technology and strengthening religiosity values to become competent and resilient accountant in Industry 4.0. So we would very welcome Prof. Toto to the screen of the Zoom. The floor is yours, Professor Toto, please.
Thank you very much, Dr. Sinta. Good morning, Dr. Gatot, Dr. Ajeng, Dr. Lina, and Dr. Chin from Malaysia. Good morning, Dr. Chu Kok Wee, and all distinguished speakers. Good morning, my colleagues, lecturers, students, and all participants. Thank you for the opportunity given to me to share the topic for today. Before I talk about this topic, let me share my PowerPoint. Are you able to see my screen?
Yes, Prof. Toto. Would you like to full screen it, please, Professor?
Yes. Okay. Thank you. This topic actually already I delivered in last couple of weeks ago in my professor inauguration. But since I really concerned about the importance of mastering accounting technology and strengthening the related values for students especially. So I would like to share this topic for today's webinar. First of all, we are now in Industry 4.0, which the business process already changed from traditional to the more complexity. The business, product, and service, the way how to improve quality, channeling and distributing that product already changed, become more complicated. The business, the company already integrated new technology, including Internet of Things, cloud computing, data analytics, artificial intelligence, and machine learning into their production facility in their business operation. We know that currently there are many new businesses, which the business have more complicated in the business process. And consequently, there are so many things that haven't been covered by accounting standard precisely. So for accountant, they have to learn the business process of the company, so they can handle the accounting process and audit process. So they will be able to cope the accountant job. This situation lead to the daily life change, aspect of our life have changed, including accounting profession. The accounting profession must adapt with the current and future change caused by the information technology. Therefore, for accountant or student, accounting student, to keep exist and relevant to the business, accounting profession must adapt and improve their skill and knowledge. They cannot stand still with their traditional capability. So to become competent auditor or competent accountant, which those who capable to perform their job, to perform their task, under accounting standard, audit standard, and they can perform based on the expectation of the employer, based on the expectation of the business management, and also can comply with the public interest. So they have to do the three things, as suggested by ECCA. All accountant or accounting student, they have to do learning evolution. They have to improve and to do skill transformation. And finally, they have to make career adaptation. Otherwise, they will not be relevant anymore for the business need for the accountant. The study released by ACCA in 2021 entitled Future Ready Accountancy Career 2020s The ACCA predict that in the future, in the short future, the role of accountant is no longer like a bookkeeper, just audit the financial statement, yeah. But the role will change. The role of accountant will change. The role of accountant still exists, yeah, to make the business or organization sustainable, but the role perhaps will shift or change. As we can see in the figure, yeah, there are 5 potential careers in the future for accountant. The accountant, yeah, will be the assurance advocate, the business transformer, the data navigator, the digital playmaker, the sustainability trailblazer. All these things can be achieved by skill transformation, learning evolution, and career adaptation. So, current accountant or current accounting student must be aware that we have to adapt, we have to learn, we have to catch up with the technology advancement, especially information technology. Kurskov in 2020 predict that the accountant profession will become blockchain accountant, meaning that it will be more specific. The skill, expertise will be more specific, become blockchain accountant, healthcare accountant, cybercrime accountant, fintech accountant, analytic guru, cloud accounting specialist, fintech city planner accountant, data security accountant, historical accounting analyst, system integrator, strategic accounting analyst. Kurskov predict that accounting profession will be more specific. Yeah. He furthermore suggests that accounting profession, especially accounting student, yeah, need skill that they will need in the short future. The skill of accounting student or accountant for now and short future, okay, including technical skill and social skill, including for technical skill, they have to understand about the capabilities, understanding the capabilities of software. So they have to study, they have to learn about software. And then basic of coding, analysis skill, fintech software knowledge, data visualization, data security, forensic tools, knowledge of international standards, this is important, data warehouse management, knowledge of industry-specific regulation, and ERP. That is the technical skill. Besides that, the student accountant need social skill, which include strong communication, conflict solving, emotional intelligence, ethical, adaptability, tolerance of uncertainty, sales knowledge, innovative, creative, and customer service orientation. This social skill is also important, as now the business competition is getting tougher. Regarding sales knowledge, for example, accountant or accounting student must concern about sales, because now in the current business environment, every staff, every employee, all employees are also salesmen. So important to know and to do sales in this case. So we are really aware that strengthening accounting technology are important for accounting student or accountant profession. In the case of Binus University, especially accounting program, there are some action that already taken by Binus University to handle this situation, to anticipate the information technology advancement, industry era 4.0. Binus University in 2018 already opened the accounting program, which is this accounting study program, which focus merely on, more focus on accounting technology related. So accounting student with accounting skill or capability supported by accounting technology capability. But for existing accounting program in Binus University, the existing accounting program, Binus strengthening the accounting technology for accounting student through cross-streaming program, minor program, and offering free elective subject related to the accounting technology or to other hobbies for the student, passion for the student. Binus also assigned the lecturer or staff to do certification and following the participating in the workshop, especially for big data analytics, ERP, blockchain, and others. Binus also opening investment gallery, recruit young talent, collaboration with industry, collaboration with Big Four and Big Four audit firm, do collaboration with world-class university, like Griffith University, University of Queensland, Swinburne University, Victoria University, and other universities. We have do collaboration, and then we apply our resources by fostering and empowering to the society. This whole program already implemented with by Binus University. We believe that Binus University, especially accounting program, can be more better to anticipate for accounting student capability, accounting student knowledge in coping their future. This is the accounting technology program courses, which is offered in accounting program technology in Binus University. This is the courses, the subject, method and practice of interest audit, big data analytics in accounting and finance, intro to cybersecurity in accounting, accounting data visualization and communication, business intelligence in accounting, business process analysis and solution, ERP fundamental, ERP financial and controlling, ERP business operation, and blockchain with another 2 free elective courses. This is what we provide to our students in facing the industry era. Hopefully with this, we empower our students, their capability in becoming competent accountant. We believe that technical skill or mastering accounting technology is very important. Otherwise, accountant will die without following the advancement of technology. But on the other hand, we believe that university not only creating the competent accountant, but university must prepare resilient accountant. Resilient accountant meaning that accountant that can be persist, that can be free from any pressure, from any temptation. Because accountant in doing their job are in the middle position, in between of the those who hire the auditor, and they have to defend all. They have to defend public interest, not those who pay auditors. So they have to be independent in action, independent in appearance. To be like that. One of the important things is about religiosity of accountant. Religiosity is the commitment of every people to their religion. According to Ferris and Diller, people behavior affected by environment, organization, psychology, and background. Of course, background, one of the background is a religion. Preston stated that religion will become most powerful for people to act morally. We believe that religion will drive us morally, will drive accountant to do ethically in their doing job. In my research, also confirmed that religious values affect auditor to do ethically in their workplace doing their job. So I think there is no doubt about the effect of religiosity to enhance the resilience of auditor, to support the independence of auditor in doing their job. See the research, other research done by Solistio, religious control can decrease audit dysfunction behavior. Also, Purnamasari and Amalia study, religious values positively and significantly affect in fraud prevention. So, religiosity works for supporting accountant behavior. In supporting religiosity value for students, Venus University provide characteristic building course in 3 semesters. One of the character building course is religion. Venus University as described by the senior manager for student affairs, they provide special and certain time for all students from all background and staff for religious activities on Friday, 11 to 13, depend on the student or staff. They can do any religious activities. On new student orientation also, the program provide schedule for discussion and learning about their activities. On every event of Binus University, Binus always start with prayer recitation. Yeah. There are religion student association for all students with different religious background. Yeah. This association really active. Yeah. They held many activities. There are social and religious activities in campus conducted by students and staff. Binus value spirit that must be embraced by Binusian is based on the trust in God. Yeah. And then discussion activity on religious issues. Many activities, many discussion have been done by student and staff. All these activities creating good environment, yeah, good atmosphere for enhancing religious values, both for student and staff. Yeah. So in conclusion, yeah, we believe that to become competent and resilient accountant, then accountant or student, yeah, accounting student, must mastering in accounting technology. Data analytics, blockchain, machine learning, RPM, etc. But don't forget to strengthening religious values, because this value will enhance, will make the content tough to be independent. Yeah. Then to prepare accounting student to be ready for the future, Binus University already done many program. Binus University has been granted excellent accreditation from Board of National Accreditation, has been granted accounting program, accounting study program has been granted excellent accreditation from Board of National Accreditation, as well as from PEAC, granted international accreditation from Higher Education Evaluation and Accreditation Council of Taiwan. Binus University appointed as first winner on research rating on intelligence level, preparing digital transformation campus in Indonesia. All these achievements have shown that Binus University is extremely well in preparing their accounting students in terms of accounting education and digital transformation. However, even though Binus University is a world-class university, Binus University always down to earth as its Binus value, which concern on religious matter for all students and Binusian. Okay, that's all my presentation. To Dr. Sinta, back to you. Thank you.
Thank you so much for the great presentations, Professor Toto. I would like to summarize a brief of your knowledge. First, you are talking about how to be a great accountant by applying the religiosity. So, Prof. Toto have said that there will be a career adaptations among the accountants. First, the future career will be the blockchain accountants, the healthcare accountants, cybercrime accountants, fintech accountants, and analytics gurus, and many other careers. And then, while this future will change, but Binus also has prepared for this accountant to be prepared in the near futures. So there is a accounting technology program, which is led by Prof. Toto, and then the cross-streaming minor program and free elective course, and also the certifications and workshop for the lecturers. For the religious matters, why religiosity matters for the accountants especially? Because started from the religion, it becomes more powerful for people to act morally. And then through the religious control, it can decrease the audit dysfunction behaviors. It also, through the religious values, it positively and significantly affects the fraud preventions. So it is all, the brief one is that the fundamental things is the religions, while by applying this religion, by being very religious, the accountants will be more morally, and it can decrease the fraud. So it is overall the material from Prof. Toto. Is there any questions from the participants? So there's one question from Archie. Hello, Prof. Toto. The topic is very interesting. I will just open the Q&A now. Is it okay, Professor Toto?
Yes, sure.
Okay. So, hi, Prof. Toto. The topic is very interesting. I would like to ask several questions. So, the first one, based on your opinion, are Indonesian accountants ready to transform with the use of advanced technology? This is the first one. And then the second one, does current technology increase the readiness and trust level of accountants in Indonesia to adopt the latest technology as part of their activities? So I over to you, Prof. Toto, to answer the questions from Mr. Archie Nathanael.
Okay, thank you, Dr. Sinta. Thanks, Archie, for the question. Yeah, our accountant, Indonesian accountant, in my opinion, I think Indonesian accountant is ready to transform the current technology, because they have to be ready. Yeah, they have to be ready. Indonesian Accountant Association and other accountant association in other country, they have the program. They have education continuing program for their member. Yeah, to catch up the advancement of technology or business process and other things. They have to do like continuous education. Yeah, per year, for example, they have to pursue, they have to attend the seminar, yeah, the workshop, the training. They have to go. They have to attend all those things. Yeah. Those who not attend, they will be incapable to be accountant. So they have to be ready with that. Yeah. So there is no choice. Yeah. They have to do all these things, die with their career. They cannot be competitive with others. Yeah. So I believe Indonesian accountant will ready to transform with the use of advanced technology. See, all big four audit firms, they already start using and utilize complex technology since 2018. Yeah, and they of course transform to Indonesian office, and not only for Big Four but other audit firm, non-Big Four audit firm. Yeah, they will try to catch up all these things. Otherwise, they not be able to get some to get the client, yeah, to get the market, because now business environment must be catch with the new technology. So they have to learn, they have to adapt. I believe Indonesian content will be able to transfer this. Okay. And then the second question: does current technology increase the readiness and trust level of content in Indonesia to adopt the latest technology as part of their activities? Yeah. The trust level of content in Indonesia. Does current level of technology increase the readiness? Yeah, the current technology must be mastered by all accountant, all related management. I mean, internal accountant, management accountant, and also public accountant as auditor. They have to master on this. Yeah. If they lack of knowledge, lack of practice, yeah, lack of capability of utilize this technology, perhaps the trust will decrease. The public trust will decrease. But as long as accountant, auditor, they can catch up the technology, pursue the advancement of technology, yeah, the public trust will be in place. Yeah. So I'm optimistic. Yeah, as long as the accountant, both public accountant and management accountant, yeah, doing their role, yeah, not stay with the current situation, but they try to be better. Yeah. They want to learn, yeah, learning evolution. Yeah. The tricky word is learning evolution, skill transformation, and career adaptation. As long as they follow this, we believe, yeah, accounting profession will be exist and needed by business and organization. I think that's all my answer. Archie, hopefully can answer your question.
Thank you, Prof. Toto, for your answer. Are you happy, Archie, with the answers from Prof. Toto?
Yes, Ms. Inta, I'm very happy.
Okay.
It's very insightful answer. Thank you, Prof.
Okay,
Toto.
great one, Archie. Thank you for your questions. Is there any more questions from the participants? You may raise your hand or drop your questions in the chat box. While waiting for the participants, I would like to just ask one question, Prof. Toto. As you mentioned that religion becomes more powerful for people to act morally, but this is aside from the technology. At the same time, in Indonesia itself, there are several religions, right? Up to date, there are 6 religions, and we face quite a lot issue due to the religions. So could you please give your point of view on it about the religion, because we are in a diversity cultures, but how to maintain this one nations, and therefore the economy and the society will have an impactful movement towards letters.
Okay, thank you, Dr. Sinta, for the question. Interesting question. Yes, we are in Indonesia. We have 6 formal religion, yeah, but perhaps more. But Indonesian government recognize so far 6 religion, meaning that we are in diversity, but we are in one big country, Indonesia. So we have to tolerant one with others. Yeah. In this case, what I'm saying is religion. Of course, any religion, as long as people believe with the religion, trust in God, yeah, any kind of God, then I believe these people will put the spirit or God, yeah, in their heart. So no matter what religion is, the religion values, the religiosity values will support their intention to do the job morally or ethically. So any kind of religion, no matter what the religion. Okay. So one study, sorry, I read at least 2 studies, one in Taiwan, yeah, from different belief. I think there are perhaps 2 major religion in there. The study found that religious values of accounting student support the intention to do ethically, to do morally in their job. And also in Middle East, yeah, I forgot the name, yeah, in Dead Sea, Laut Mati, study in Dead Sea, Laut Mati. There is a study about the old script. Yeah, they also the study found that religious values support their job to do more ethically. So far, yeah, I believe that no matter what religion, but any religion will support people to do work more ethically, more responsible. Okay, that's all, Dr. Sinta.
Thank you for the insightful answer, Prof. Toto, because at the end of the day, religion is talking about goodness, right? No matter what is the religion. So thank you so much, Prof. Toto, for your insightful knowledge and for your time. We will see you later in the near futures, and thank you for your time for being here. And for the next sessions, that is the end for the first sessions. I would like now to invite the second speakers to the screen. Please welcome Dr. Chitra Amanda.
Hello, Dr. Sinta. How are you?
Hi, Dr. Chitra. How are you today?
Good. How are you, everyone?
Everyone, we are all good. Hopefully, you are good as well. Before we move forward to your sessions, I would like to introduce you to the participants. She is actually a new lecturer in finance program, and Dr. Chitra Amanda holds her PhD in finance from Department of Accounting and Finance at the University of Auckland, New Zealand. It is a neighbor from Professor Toto next to Australia, right? Her research interests include empirical asset pricings, banking and regulation institutions, and asset valuations. She currently teaches derivatives, portfolio management, and financial modeling at Binus University. Previously, she worked at Indonesia Deposit Insurance Corporations and Central Bank of Indonesia. This is such a great industry experience, right? As a banking and industry analyst, she is now the subject content coordinator for investment and risk in finance program. So welcome, Dr. Chitra, as our second speaker to these sessions. I would like to over the floor to you, and you will be sharing the knowledge about decentralized finance in the emerging digital economy. This is very interesting topic. So I am looking forward to your sessions. Please, you may share your screen now, Dr. Chitra.
Okay. Thank you, Dr. Sinta. I share my screen now. Okay. Let me know if you can see my screen.
Yes, it's already here.
Okay. Okay. Hello. Good morning, ladies and gentlemen, and good afternoon from my colleague in Malaysia, because I know it's already midday there. So yeah, it's my pleasure to be here to share some thoughts about decentralized finance in the emerging digital economy. Yeah, especially for my colleagues in RUC Malaysia. I had one seminar when I was in Auckland, so it's so good to see you again here. Yeah, so I really excited here to share some thoughts, some knowledge about the what's happening with the finance in right now and in the near future about the decentralized finance. Okay, so why I choose this title? Because decentralized finance started gaining prominence as a replacement for the traditional finance system. And it's logic that mainly digital finance evolves in decentralized way, right? So as most of the financial transactions in the economy are digital, we're still using banknotes and coins on occasions, right? Just like me, I also prefer cashless. So I have almost no cash in my purse. So when I go to like in the not in the groceries, but in the road, and I want to buy something, and I often say, oh, I don't have any cash, so something like that. But it's really opposite with my mother, because she always ready with the cash. So it's a bit, different kind of a lifestyle this moment, yeah. And then, yeah, so I come up with this topic, decentralized finance, or we call it DeFi. It's an emerging industry that has the potential to disrupt traditional finance because of its ability to be a financial tool that is outside of government and regulatory control. Okay. So next, what is digital economy? The digital economy is the economic activity that results from billions of everyday online connections among people, businesses, devices, data, and processes. So the digital economy refers to a broad range of economic activities that use digitized information and technology and knowledge and as the key factors of their productions. The backbone of the digital economy is hyperconnectivity, which means growing interconnectedness of people, organizations, and machines that results from the internet. So the internet is the main thing of the digital economy, such as mobile technology and the Internet of Things. So we do all the things now. Most of the things, most of the activity with the internet. Okay, so the internet, cloud computing, big data, financial technology, and other new digital technologies are used to collect, analyze, and share information digitally. Digital economy creates benefits and efficiencies as it drives innovations and also boosts the economy, the economic growth of the country. Yeah. Okay, this figure I quote, I picked from the Harvard Business Review. It shows the current level of digital technology, the current level of digital development, technology development of the 90 global economies. Yeah. It divides into 4 zones, as you can see there. Stand out, stall out, break out, and watch out. So they divide the countries, refer to their level of existing digitalizations. Okay, so as you can see here, standout zones includes economies with both high levels of existing digitalizations and strong momentum in continuing to advance their digital capabilities. Yeah, and the breakout there. Oh, the standout, you can see South Korea, Singapore, Hong Kong. Yeah, they have the standout economies for their digitalizations. And then for breakout, it is categorized by economies with limited existing digital infrastructure. Yeah, but it's rapidly digitalizing. It's like Indonesia, India. Yeah. Moreover, they have a potential to rapidly digitalize for both post-COVID economic recovery and for the longer-term transformations. For stall out category, yeah, it has mature digital landscape. Okay. So just like the example here, you can see most of them are from the European Union. Yeah, and then the watch out here, and the digital evolutions characterized by shortcomings in both existing digital capabilities and momentum for future development. Yeah, so we can see here how they digitalize their economy, yeah, how their level of the digitalizations. Moreover, during COVID-19 pandemic, I see that yeah, we can see that so many countries face repeated lockdowns, school, office, and yeah, public closures and shutdowns of all the industries. Yeah. So digital capabilities have become more essential than ever. And also it means that a technology-driven economy could assist in mitigating the impact of the COVID-19 pandemic and recovering the country's economic loss. Yeah, also to foster the growth of the country's digital economy. Okay. Just like shown in this picture, it's compound annual growth rates of the digital economy from Asian Development Bank 2021. So the share of the digital economy to GDP fell for most economies over time. Two types of compound annual growth rates per economy present in this figure. But in several economies, you can see here, the digital GDP growing more exceptionally than others, like Indonesia, India, Kazakhstan, and Malaysia. It's more than 6% of, even though it shows negative growth rates, but they still have room to grow for their digital economy. So each country can enhance areas of action to fully capture a country's digital opportunity. They can do such as the enhancement of digital skills training and educations. They can accelerate of digital adoptions and innovations, and promote of digital trade opportunities. Just like we have learned from Dr. Chow, she said in Malaysia, like today or tomorrow, they announced the banks, the digital banks license, right? So we have in Indonesia, we have I think we have 10 banks. It's already digital banks, and it's grow. Yeah, and also the OJK or FSA of Indonesia, they already have the regulations that differ the online banking with the digital bank. So we already have the regulations. So there's no small bank that which is the traditional or the conventional bank that name that they are a digital bank because of they don't have any physical office. So it has to be very clear in regulations about the digital bank, for example. Okay, so let's talk about something that most people love. It's music, right? So I assume that we love listening to the music. Yeah. So I choose these two examples to show how the world is changing. So I still remember I came to Malaysia and Singapore just only to came to Taylor Swift concert in 2014. Yeah, 8 years ago. Yeah, so I came to Malaysia and Singapore. I did watch in Jakarta, but I don't know. I'm a fan of Taylor Swift, so I came to Singapore and Malaysia just to watch Taylor Swift that time. Yeah, in these examples, the pandemic has fast-tracked the adoptions of digital experiences and has brought more people into the metaverse than ever before. Yeah. For example, here, Ariana Grande with Fortnite for a unique in-game experience. Yeah, it says Rift Tour, Ariana Grande, the musical journey. And Justin Bieber, he also have a virtual concert. So people buy this concert, or they buy the ticket to experience the live vocals with the in the digital world. Yeah, so it's a new thing for us. Yeah, and then it's accelerated by the pandemic. So the digitalization is very grown. Yeah. So we are in the digital, the emerging digital economies. We still keep it up, and we still build the ecosystem to to offer the service, to offer the good and services into in terms of the digital economy. Okay, so before I move to the decentralized finance, DeFi, so I'm going to talk a little bit about the history. Okay, so the evolutions in finance. We will think, how is the history of DeFi? So this is the I get some of these pictures from Campbell R. Harvey. Yeah, so this is the history of the finance. It begins with the earliest methods of market transactions. It was barter. Yeah, interestingly, barter is a P2P or peer-to-peer technology that we know that now it's P2P. Yeah, interestingly, barter was a peer-to-peer technology. This is essentially the first decentralized finance where we've got peers, like A and B, the person A and B, interacting with each other. Yeah. But the early barter here in Egypt, 9,000 before century, a long time ago, is very, very inefficient. It's very difficult to, for example, to find somebody that has things that we want. I want a gold, the premium gold, but they only have pure gold, for example. So it has the difference of specifications, right? So next, after the barter, we have the first coin in Lydia, and then banknotes, and with these transactions, you had to have an exchange. We have to have an exchange that made sense to both peers. So for person A and person B, or C and D, and then money was introduced, and it largely solved the problem. Money as a unit of account and medium of exchange, right? And also a transfer of value. And okay, back to gold coin. It's introduced in Lydia, and this solved so many problems that were caused by inefficiency of the barter system. And then in the first ATM, in the first ATM in London, and then in the year 90, internet banking introduced in the United States. And then they introduced the credit card with the chip and PIN in 2005, and then the cashless payment with the Apple, for example. And then now, in 2008, Bitcoin was put on the internet by Satoshi Nakamoto, which we don't know who he is. Is he a group or a person or a machine or whatever? We don't know. So this is the first cryptocurrency, and it needed is market capital, and the market capitalizations of Bitcoin is roughly half of the value of all cryptocurrency. Okay, so we know that the world of blockchains really exploded since 2020 and 2021. Yeah, it makes all major financial institutions around the world are looking at the potential of frictionless. Yeah, so it's frictionless payments, like lower the cost, lower the interest rate, lower inefficiency, and yeah, they want to reduce the costs. So we will describe DeFi in simple way as an open financial sector that runs on top of a public blockchain. Okay. As it acts as an alternative to centrally governed institutions or centralized finance, such as banks, that have historically act as a financial intermediaries. Okay, so in the centralized finance, we have the regulator, or for example, there is a central bank who regulate the money supply, who regulate the interest rate. Okay. So now I will give a brief overview of some of the problems that come up in centralized finance or CeFi. They are centralized control, limited access, inefficiency, lack of interoperability, and opacity. To centralize control, the banking system is highly concentrated. Yeah, so the large banks have significant influence. For example, in Indonesia, there are 5 to 10 large banks. Yeah, so the concentrations is very concentrated. So if you know in finance, we have a term like Heervener-Heersman index, like HHI index. It's quite concentrated, highly concentrated. Central national banks also have control over the fiat currencies like US dollar, rupiah, and rupee, for example. Yeah, they control the interest. In the centralized control, for example, the big company like Facebook or Tesla, yeah, they have a big amount of business that they do. And when it comes to credit card or the loan over by the banks, and it requires like the cost of 1 to 3%, 2%. Yeah, it's a big deal for the big company. Okay, so that's come up with one of the problems that come up with the centralized finance. Limited access, like people that are unbanked are left out. In Indonesia, there are not all the people is banked. Yeah, so they are some of the people are unbanked. It means that many entrepreneurs are forced to use the alternative, such as credit card, to get financing for their business with a high fee or high rates. Okay, so it's very inefficient. And also, the transfer sometimes is slow. Yeah, transfer or the settlement. If you buy a stock, for example, you're trading and you want to move some money from bank to your trading account, it takes time. It takes 1 or 2 days. Yeah, in this internet world, in this digital world, it's really slow. Yeah, so some of these companies recognize that this is a problem, and when they acquire a fintech, for example, I remember Citibank that they acquired a fintech platform, but it was blocked by regulators. They want to make a speedy services, but for the fintech at that time, the regulators blocked that platform. And then opacity. There is very little transparency of the risk what actually bearing. It is really hard to customers to figure out the risk of the actual bank. Yeah, we don't know if we put our money in the deposits and what the banks will transfer our deposit to the risky loan or the risky projects, or how risky the project is. We never know. Okay, we only see how the regulators, for example, they put the rating for the bank A, bank B, bank C, but the projects, we don't know about the projects that they bear the risk. Okay, so the people really upon regulations. Okay, and then also the missed growth opportunities because of the cost of capital is high. Yeah, the cost of capital higher than the return on investment, for example. So the entrepreneur might not pursue the project, might not cancel the business, might not postponing their loan. Okay. So what DeFi offers is to establish a technology that is inclusive, that allows for equality of opportunity. Okay, so this is the picture. Yeah, the traditional finance. You can see it's centralized, and this is the decentralized. Okay. Okay, and then comes with the fintech. It refers to the integration of technology offerings by financial services companies in order to improve their use and delivery to consumers. So when costs are high, people will think, people will do innovations. So the innovation will arise. Okay, they come up with the fintechs. This is the same. This is the picture I get from Financial Innovations journal. So I don't want to talk about the finance tech companies, but it classified into some of the categories: banking infrastructure, business lending, consumer banking, consumer payments, crowdfunding, equity financing, and so many categories. Okay, so this show leading companies in some of these categories. So it allows users to perform financial transactions without having to interact directly with the banking system. Okay. Okay, just like Dr. Cho already showed us in Malaysia, fintech in Malaysia, during the pandemic, the e-payment grew into 2020, that it drives the online and contactless transactions, and also in the new normal like now, it's expected to grow. Yeah, also I agree with that. In Indonesia, also in the financial technology, it's really growing. Okay, wait a second. Okay. So decentralized finance versus centralized finance. It's hotly debated topic, even in the academicians, practitioner, yeah, even in the social within people. Yeah, it's a hotly debated topic at the moment. In decentralized finance, public blockchain acts as the trust source. So we trust the blockchain, yeah, governing all operations in the financial sector. In contrast, public governance, which entails laws and licensed financial institutions, acts as the trust source, governing all operations in traditional finance. So decentralized finance stand out as an alternative to traditional finance because it can do away with today's financial bureaucracy, which is a burden of today's financial system. The use of the digital ledger or the blockchain and the digital ledger technologies has made it possible for people to gain full control. So we have a full control of our money, of our assets, okay, and their personal financial data. when transacting in the global financial sector. So in decentralized finance, there are no regulator. We rely with the blockchain. So we have a full control of our assets. Okay, the use of open source code and developer tools presents a unique opportunity, as developers would now be able to experiment with more financial instruments as decentralized finance continues to gather pace. Yeah. Developers here will be able to work around the clock without restrictions. So there is no clock restriction or time restrictions. The market is open every second. Yeah, there's no a close or open and close time for the office, and then the open market. Yeah, so people from all over the world can come anytime. Okay, and blockchain technologies are accessible and transparent. It can make the issuance of loans, repayments, and loan terms. It's easily readable by machines and also by humans. So what makes its difference? Again, DeFi has more efficiency, removing the intermediaries such as the regulator, the bank. It will cause less frictions and makes processing of financial transaction more fluid. And DeFi is costless, it's more open, and it's a democratic system, okay, because there's no regulator. Okay. Okay, next. Oops. Okay. I'm sorry. This is the graph of the total value locked in DeFi in USD. I generated from DeFiPulse.com. I hope it's trusted. Yeah, it's trusted. It's from August 2017 to March 2022. Yeah, you can see the growth. Yeah, the trend. It's really increase. Yeah. Moreover, in 2020 to 2021, yeah, and it less decrease now. Maybe some interruptions like a war or something. Yeah, the Ukraine and Russia and the commodity price. Yeah, it has effect in the total value in DeFi. So this is how much money is locked in DeFi protocols, and thus it helps us to get a clear view of the overall health of the DeFi market. Okay. Okay, let's discuss about the infrastructure. Blockchain is the first native digital medium for value. A blockchain is a shared, decentralized database that allows the documenting of network transactions. So all of the transaction is written in this digital ledger. Okay. So the transactions are stored in an immutable block. Yeah, it's an immutable block that holds all of the transactions informations. So inside the network, the node, any valuable transactions or knowledge may be registered and exchanged, peer-to-peer. So the previous techniques of transactions, like in traditional finance or centralized finance, the transaction recording are centralized. Yeah, based on, for example, what banks are you in, which banks, yeah, or which intermediaries. Yeah, it's an inefficient. Seems costly. It's costly because it charges you some fee, right? And interest, repetitive. Yeah, which is where the blockchains, not the Bitcoin, blockchains steps in. Okay, so the Bitcoin, anyway, it's a decentralized peer-to-peer digital currency. Yeah, it's a common example of the blockchain. Okay, in DeFi, everything is transparent, a blockchain technology. Key infrastructure components are blockchains, cryptocurrency, smart contracts, oracles, stablecoins, and decentralized applications. So in the infrastructure, it aims to decentralize processes so that data may be shared among all stakeholders rather than being kept in a single ledger. Yeah. So it enables the creations of a peer-to-peer networking without involvement of the third parties. So because of the absence of the third party, the procedure goes more quickly and less money. It's reduce the cost. Okay. So how it can verify? Yeah. The smart contract here, it executes as written pieces of code that automatically execute actions if certain parameters are met. For example, if you want to transfer your money to people A in that country, in that there is a parameters. People A in the country, it's a male, it's age 25. That person, the smart contract will return that parameters. So it's reduced the risk of the being a mismatch or the failure, transfer failure for the person A to person B, or yeah. So that's what the smart contracts do. Okay. And the stable coins, it's a single entity to maintain the collateral. So they designed to make the prices more stable because it's packed to the currency, for example, dollar. So it's like a 1-by-1. So it's the ratio. They keep the volatility of the cryptocurrency lower by the stable coins, because the value is stable to the dollar or any currency packed with the coins. Okay, so last is decentralized applications. It's like the DeFi protocol like Uniswap. I don't really into the apps, but it's a kind of a decentralized exchange, for example, the Uniswap. Yeah, and be careful with the decentralized applications and not decentralized, because when you go to the cryptocurrency, the app might be decentralized and might be centralized. So there's maybe one person or one group or one institution or whatever. It holds the assets of the cryptocurrency. So in Uniswap, yeah, the protocol in Uniswap, for example, it's fully decentralized. Yeah, I don't want to mention the example in Indonesia because I will give him the name of, but yeah, you can just Google it, and there is a decentralized and centralized applications of the cryptocurrency that you want to buy in the market. Yeah. Okay. This is the I want to show the centralized, decentralized fiat money and cryptocurrency. So in Indonesia, still we cannot use the cryptocurrency as the payment. Yeah, we still use the fiat money because we cannot use the Bitcoin or any cryptocurrency like Ethereum, Solana, and other cryptocurrency for the payment system. Yeah, so blockchain technology has seen significant evolutions in the financial services business. Small payments have become more inexpensive, thanks to distributed ledger technology, the Bitcoin. Yeah, so this is the example of the centralized finance crypto banks, which is a centralized, but it uses the crypto assets. Yeah, if you go to the graph here, if it's decentralized and it's crypto assets, the lending protocols, for example, here. Yeah, so this is the one of the example. If it's centralized and it's only using fiat money, oops. Yeah, for example, the Bank of England, Bank Indonesia, yeah, we still centralize and use the fiat money. Okay. So even though there is some problems with centralized finance and then come up with the decentralized finance, but also the risks and the challenges. Yeah, so there are risks and the challenges with the decentralized finance, because any good technology is always prone to challenges that may derail its adoptions. And decentralized finance is no exceptions. So it comes the risk and it comes the challenge. Okay, some of the article I quote here, the three. It's from BIS, DeFi Risks and the Decentralization's Illusions. Okay, so one of the biggest challenges that could stop decentralized finance from replacing traditional finance system is the aspect of people being trust unregulated open source code. So if you want to come to the decentralized finance, then you have to be forced to trust unregulated open source code, because it's unregulated. So you trust the open source code, you trust the blockchain, the system, the ecosystem that built by the blockchain. In fact, that the risks such as the hackers, the smart contract hackers, they can steal the keys from your wallet. It can result in people losing substantial amounts of money, right? So even though they claim that they are very safe, the blockchain is very safe, but we don't like 100% agree with that. So there's maybe some room of the risk, of the money can be stolen, or your cryptocurrency can be moved to another another wallet. And so there are some flaws, the bugs in the smart contracts, the error in the code, and the volatility, of course, the volatility of the cryptocurrency. Okay, and also because it's happening, the tokens, the coins, especially the tokens. We have to, as an investor or as a newcomer or as a people that watch the market, we really have to see what project inside the tokens. If they offer the new tokens, for example, token A, that's the ecosystem that we want to offer, we want to build. So it has to be clear, what the DeFi projects to pick and which ones to invest in. Okay, so this is the current research work, completely collected many ideas and opinions connected to the decentralized finance. The scientific and economic society opinions are divided. Some analysts think that cryptocurrency overhyped theme, and the example of the economic bubbles 10 years ago as a part of the centralized finance history. It would be a good lesson learned. So, in my point of view, decentralized finance has the potential to provide financial service with an open, transparent, and robust infrastructure, and has the possibility of reaching a broad range of users with its basic financial services. However, this requires further development of the effective management of the risk. Okay, thank you so much for listening. Any questions and comments are welcome.
Okay, thank you so much, Dr. Chitra, for your very insightful knowledge about DeFi, decentralized finance, and you also explained about the how it is when we compare to the centralized finance, and how it is very important to understand about the decentralized finance, and which is nowadays we are very into it. We are very deep to understand about this. So before we move forward to the Q&A, I would like to summarize your sessions. So decentralized finance started gaining prominence as a replacement for the traditional finance, especially in the emerging digital economy. DeFi, in a simple way, as an open financial sector as an alternative to centrally governed institutions that runs on top of a public blockchain, motivated by some of the problems that come up in centralized finance, such as inefficiency and opacity. So not only blockchain technologies are accessible and transparent, it can also make the issuance of loans, repayments, and loan terms easily readable by machines. However, there are some risks and challenges follow these new technologies, such as fraud, bugs in the smart contracts, and risk relates to the volatility of cryptocurrencies. So in emerging digital economies, it requires further development of its DeFi technology. So I guess that is enough for the knowledge from Dr. Chitra's session. So there are some questions already in the chat box. I'd like to read for the first one from Ponsri Merily. Will RPA, AI, and robo-advisors, known as the digital platform using algorithms to automate investment portfolio, as skilled virtual employees affect the corporate demand for accountants or financial advisors? Could you please hang this?
Okay, thank you so much, Dr. Merily, for the questions. Digital platform using algorithm. Okay, so in my point of view, in my opinion, it will have an effect, yeah. But it doesn't mean that we don't have a skilled accountant or financial advisor, right? But a skill set that that is needed is expand. Yeah, we need more skill set. So in the basically the robot process automations, yeah, RPA, or artificial intelligence, the machine learnings, etc., will still need our our hand, yeah, our knowledge, the human sense, as an accountant, yeah. So for example, in the case of the machine learning, it still need the accountant or the financier or for example the finance, yeah, in finance, to give the training data, yeah, to give the training data to validate the model. They will provide the models. They have the deep learning, they have neural network, they have even they can do the OLS to the very advanced model. But it still have us to get the to put the training data. What do we want to predict, for example. And so that's why still right now, we still need an accountant. We still need an accountant, but in the future we need a skill set that they need to know about the process of the informations, of the digital informations, and the basic or the more advanced of the technology basics. Yeah, I think if I can answer that questions.
Yeah, thank you, Chitra, for the for the answers. I was thinking that in time to come in the future, would we actually be slaves of the machines? Because you see, they are actually basically doing much of the work. All right. You see, like now we are having a smartphone, we have smart home, we have smart car, and then we have now smart virtual employees, and more smart to come. You see.
Yeah.
So the thing is, so I was wondering, in time to come, and then moreover, our population, as you read, in the research, they say that we are actually moving to an aging population. On one hand, right, it's an aging population. On the other hand, aggressive digitalization. See? So I wonder how are we going to, relate these two issues together. So I was thinking, are we going to be actually slaves of the machine? I know this is just a thought, okay? I think nothing relating to your topic. Sorry. Okay, thank you.
Right. You're right, Dr. Mary. Yeah, I think for the near future we still need the human. We still need the
I know for actually analytical analysis and all that.
Analytic analysis. Yeah.
But whether we will create a surplus or not of these employees.
Yeah.
human employees, surplus of human employees. Right. Thank you. Sorry. Yeah.
This might, yeah, I think the machine will give us the choice, but we still pick the best alternative. They already set some of the alternative, but what very suitable with our current situations, like for example, in finance, we do the predicting of the variable X, for example, for our training data sets. But still, at the end, we have to pick which one is the most suitable for the research questions in finance, in academics. Yeah, maybe that's the example. Yeah.
Thank you.
Yeah, you're welcome.
Thank you for the questions, Dr. Lee. Actually, at the end of the day, it's still about society 5.0. That's why human being is still needed there. So that is to close for the first questions. And then we move forward to the second questions from Ronald Trulindo. How DeFi ensures stability of its cryptocurrency? It's very interesting questions. Please, Dr. Chitra.
Okay, in my point of view, how DeFi ensures stability of its cryptocurrency. So if we see the centralized finance, of course, the central bank can have a rule to set the interest rate, for example, or to regulate the money supply. Yeah, for cryptocurrency, it's the setting. Yeah, the rates this high or this low. It's depends on the blockchain. Each blockchain, like Bitcoin has its blockchain, Ethereum has its blockchain. So we have to have the trust of that blockchain if we want to put our assets in that particular blockchain. Yeah. So it's about the market. What do we call it? If all the people watch in the market, so there is no hazard. There is no moral hazard. Yeah. So for example, the blockchain of the Ethereum, they have the automatic mechanism. Yeah. And by the program to set the coin rate. Yeah. That can be made. We can do the mining each time or daily. Yeah, to make sure the coins, the number of coins in the market, yeah, it's not too high, it's not too many, it's not too much the coins, so it won't creates the inflations in the cryptocurrency market. So it's like a mining system. Yeah, so it sets the number of the coins. So if it helps.
Okay, thank you for the answers, Dr. Chitra. I hope Ronald happy for the answers. Hopefully it answered the questions. And let's move forward to the third questions from me. Let's close this session with from my questions. You have discussed a little bit about the lending, business lending, and now because banking is actually having a rigid regulations. That's why there is a peer-to-peer lending nowadays. And during the COVID-19, when these countries was hit by COVID-19, this peer-to-peer lending saved the what do you call it, MSMEs. So it also boosts up the economy, but at the same time, it also give a high interest rate that you said before. So how do you see about this when it is somehow quite difficult to get the what do we call it, financing from the banks, but at the same time it has higher interest rate from the peer-to-peer lending? So, and how does it how we see it from the investor side? How attractive is this for the young investors for their alternative investments?
Okay, thank you, Dr. Sinta, for the questions. About the lending, yeah, in centralized finance, we know that the bank as intermediaries, right? And then in the peer-to-peer lending, yeah, we have the person A and person B, and if we really need the money, and then like a supply demand, then they will charge us the high interest rate. Yeah, for any applications in fintechs, then they charge the high interest rate, even though the motivation was we need the costless. We want to reduce the cost. We want to reduce the cost of capital. In decentralized finance, we can it can also protect with the collateral. Yeah. So our cryptocurrency assets, our crypto assets can be collateral. So, but we are free to pick, yeah, any lenders or any borrowers, yeah, to finance our need. And so it's free. There's no any regulation that for this person A, you don't have a choice. You get 5% or 3%, but we have a freedom to pick the lenders or the borrowers. Of course, with collateral, the cryptocurrency or crypto assets. So it's stabilized, you know. So or NFT. Yeah, you can. It also can be a collateral, for example. Yeah, I hope it helps.
Yes, it answers the questions, and you close it with NFT, which is nowadays is very hyped today.
Do you have any?
No. do you have any?
I'm still thinking.
Okay, good then. Let's close with the last questions from Ma'am Ajeng. She is the committee of today's session, so let's give this place to her. How would DeFi ensure the issue of devaluation of rupiah from 1,000 rupiahs to 10?
Oh.
Or Ma'am Ajeng, could you please ask directly to Dr. Chitra?
How would DeFi ensure the issue of devaluation of the devaluations issue? That's
Right.
interesting.
Yeah,
Bu Ajeng.
because you were mentioning about the transactions, the evolution of transactions, and now there's an issue of scenery. The thousands becomes they actually subtract the zero from thousands to just only one zero. So what would you say about it? With this definition of with DeFi.
Yeah, but first, Ms. Ajeng, in Indonesia, we cannot pay the things. It's not a payment with the Bitcoin or any cryptocurrency. Yeah, they still not allow us to use the cryptocurrency as the payment system, but only for the assets like commodity. Yeah, for the commodity, it's okay. So for the issue of devaluation, I'm also still not sure. I'm gonna check if there's because the devaluation is like 1,000 to we cut the 1,000, right? So yeah, because of we don't use the cryptocurrency for the payment, so our inflation still, from the money supply from the forex and then for the government interventions. So yeah, maybe it has an effect later if the government allow us to use the cryptocurrency, but yeah, I still need to check if it's how big the issue.
Yeah, it just tickles me, because somebody was asking about cryptocurrency, whether that one also suitable with this event,
So if people trust the blockchain, if we trust the blockchain and the government also trusts the blockchains, even though they are just a mid trust of the blockchain with a stable coin, but later if they trust the blockchain, I think there is no there is no in the money changer, for example, we'll never see any money changer in the airport because we all have the wallet. We don't need like 2% for the broker for the foreign exchange, when we convert our rupiah to USD. Yes, it doesn't need anymore if it's all decentralized and the digital they put all the transactions in the ledger that very trustable. Yeah, so we can trust that.
I'm still old-fashioned, so I still go for the banknotes.
Banknotes. Sometimes it's important, ma'am, to put some banknotes and coins in the pocket.
Yeah, true. But now, of course, in Indonesia, GoPay has replaced GoPay, OVO, and Shopee and Tokopedia has replaced all that with caseless. Yeah. So we don't have to go anywhere. let our phone do the working, and immediately all our wishes come true in our table.
Ma'am Ajeng, you just need to cook at home, and then you just need to buy stuff from online.
True, exactly.
Because you are a
That's what I've
good
been
chef,
doing.
right?
True, yeah.
Okay, thank you for the questions,
Thank you.
Ma'am
Thank you,
Ajeng.
Ma'am Ajeng.
For the very last questions again from Puan Sri Merily, please answer it briefly, Dr. Chitra, as our time is going out today. Is cryptocurrency a legal tender in Indonesia? Because it is not a legal tender in Malaysia, because there are too many limitations on the digital currencies.
Same, ma'am. Same.
Yes.
Sama. You the same. Sama.
Sama-sama, thank you.
Yes.
It's not a legal tender. Yeah.
Okay. Hopefully it answers all the questions. Miss Chitra got many questions today. One last question. As you show the ticket of Justin Bieber, do you get a ticket for this November's concert?
If it's Taylor Swift, I go.
Oh, if it's Taylor Swift, you will go, but it's Justin Bieber, so you are not going. No problem.
Yeah, just my nephew or my.
Okay. Thank you so much. Yes.
Send it over to Malaysia.
Send it over to Malaysia. Okay, you can send it. Thank you, Dr. Chitra, Dr. Merily, Dr. Ajeng, and all the participants. Thank you for staying up to today. This afternoon, is it right? In Malaysia also afternoon, right? Okay. Thank you. Hopefully you will have a good lunch after this, after the very good morning and then a very great afternoon today. Have a very great lunch as well. I over it to Kania as the MC and see you later. Bye-bye.
Okay, thank you, Dr. Shinta, for guiding us in the second session of today's event. And also thank you to Professor Toto Rusmanto and Dr. Chitra Amanda for being willing to be speakers at the second session today. I would like to remind to all Venusians to submit the summary of today's webinar before 6 p.m. And for participants from TAR-UC and Venusian Maxi, please fill out the form via the link that will be provided in the chat box. And next, finally, we have been adjourned today's webinar. Thank you, our speaker and moderator, for making time and joining us today. We certainly appreciate all the hard work and dedication you provided to make this event a success. Lastly, thank you, participants, for joining this international webinar entitled Accounting and Finance Transformation in Digital Era. We highly thank you for your support. This event is supported by Bina Nusantara University and Tunku Abdul Rahman University College. That is all for today. Have a great day and stay safe. And for the participants, you can leave the Zoom now. See you in the next webinar. Bye all.
Thank you. Bye-bye. Bye. Thank you.
Thank you.
Thank you.
Thank you. All the best, everyone. Okay, stay safe.